Hey, good evening, everyone. In tonight's free video, I want to quickly take a look at oil. I've been getting some questions on oil recently as to where we think it's going. And what we looked at and what we look at all the time is impulses, right? Whether it's to the upside or downside. So as an example, you can see the last impulse right here was down, right? This older impulse. And then when it broke below that level, we were able to use the extension levels to find predictive level where the market might go. Now it went to the 127. It pierced a little bit, but then it held it, and you can see it held it before finding some support here. So the most recent move, really, if we look at it, and it's not the easiest to see, we had this move right here. So that was one move. And again, when we measured that, we were able to find a predictive level where oil would go, and it got to the 127 and then rejected. Now, if we look at the bigger leg right here, right, which is what we're looking at, this bigger leg, you can see we just broke above there last week. So we closed above there. And what we're looking for is, again, there's a 70% chance that we get to the 127 level, okay? 70%. It's not 100. Remember that. So keep an eye on oil here. But what I'm looking for is any long signals that occur, whether it retraces back or we get a long signal on like a 60-minute or a 15-minute or, well, 15 might be too low, but 60-minute, 4-hour, 2-hour chart, or even daily. What we're going to try to do is see if we can catch it and then ride it up to this 127. Okay, so you get like your, let's say you take a 60-minute trade and you get your first target, it's whatever, 50 cents, 30 cents, and your second target is 80 cents. And then what you'll do is if you have a third on, we'll go break even, and then we'll see if we can ride that one out all the way up to the 127. We've done this before. We've had this on like gold trades where we've gotten like the first, like a year ago we had a gold trade where we took it and the first target was like $4. The second target was like, $7. And then we put our stop below structure, just below break even, where we would have still netted, we would have lost like $2 on it, and we let it run. And what ended up happening is we got that huge breakout, and gold ended up running, $150 before slowing down. So it was an amazing run. So same thing with gold here. Now we're not looking for a $150 run, but what we believe is that there's a 70% chance we get to the 127, and that any long entries we can get in intraday will take. We'll take the first target, second target, break even, and then see if we can ride it. If you only trade one contract, then you can do first. You can just get in and then leave your stop at the appropriate place, and then see if you can push into that. If you have two targets, you can do a first target, then stop, break even, and then see if you can run. But we're not going to chase it, right? We're not going to jump into it simply to jump into it. We're looking for a specific setup. Okay, so hopefully that helps. Again, 2-day class on Wednesday and Thursday. Make sure you sign up for it. We still got a couple spots left. It'll be fun. It'll be interesting. You're going to learn a lot of setups and trades that we do on an everyday basis. I think it can be very helpful for those of you looking for a very specific rules-based way of trading. And for those of you who are interested in learning in fibs and how they can really benefit your trading, this would be a great workshop as well. So make sure you take advantage of that. It's available, and information on that is on ratiotrading.com. Other than that, we'll see you guys at the next update.